This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's episode is all about DeFi, Decentralized Finance. So here at Brave New Coin, we have a team that are really excited about the DeFi space. Shout out to Don and his team. Anyone in the crypto ecosystem will be aware that last week there were two quite significant incidents that happened in the DeFi space where, depending on your point of view, an attacker or a clever trader was able to take advantage of the BZX protocol by some very clever use of a new DeFi innovation called a flash loan. Now, flash loan allows you to borrow potentially a large amount of money as long as you pay it back within a single smart contract. And the clever part is that you can have multiple steps within that smart contract transaction, which allows for all sorts of exciting opportunities or potential shenanigans. It means the attack surface can be wide open for exploits if that code isn't debugged very, very ruthlessly. So was this a theft or a hack or simply a legitimate arbitrage trade that used the system as programmed and as designed? You can make a case for either argument, I think. So my guest today is Stani Kulechov, and Stani is the founder and CEO of the Aave Protocol, which is one of the most exciting and one of the newest DeFi protocols. So in this conversation with Stani, we recorded it a day or so after the first flash loan incident, but before the second. And so we do talk a bit about that today. Now, I actually have an interview booked with Kyle from the BZX protocol. So that should be the next podcast out after this one. And I'm sure we'll discuss those two flash loan incidents in more detail in that episode. So today is more of an introduction to DeFi, to flash loans, and it's all about the Aave protocol. So let's get into it. Welcome to the show, Stani.
Thanks, Andy, for having me here, and glad to be here talking about DeFi and Aave.
So, Stani, I thought it would be good just to give a little bit of an overview of what DeFi is, just to kick off, and then we can dive into Aave. How does that sound?
Yeah, sounds pretty good.
All right. Well, rather than me try and tell you what DeFi is, probably makes sense if you try and tell me and tell the listeners. So, yeah, from your perspective, what is your high-level summary of what DeFi is and what the promise and potential of DeFi is?
Yeah, definitely. There is basically many interpretation of what DeFi actually is and to what extent. But just in plain simplicity, decentralized finance basically means financial transactions where you're relying in non-custodial protocols. So basically, in traditional finance, we always have been relying upon third parties, whether it's a regulated bank, asset manager, or just a friend you're, for example, lending funds. And the idea of DeFi is to utilize smart contracts in a way that you don't need to have this kind of like a counterparty risk or custody risk. So whereas in traditional, for example, cryptocurrency exchanges, you're giving up your funds, them to hold. In DeFi, you're actually having those funds in a smart contract that basically is public and that you can actually read what kind of transactions that smart contract can do and agree upon either to deposit or not to deposit. And that's the very basic thing of the DeFi, the non-custodial aspect. And of course, there's even larger kind of like a definition or overview where protocols are permissionless, open finance, everyone can participate without giving too much of information. The point to realize is that DeFi is not a binary thing as a switch from on and off. It's a spectrum. So some protocols are more decentralized at the moment than others, and it's just important to understand what the user is interacting with.
That's right, Stani. DeFi is all about building out a trustless, transparent, decentralized financial system for anyone who wishes to participate. And as you mentioned, the DeFi products and services, or the trades, transactions are executed using smart contracts. And that's the reason why the DeFi ecosystem is mostly based around the Ethereum blockchain, and Ethereum has a really large and passionate community of DeFi developers, right?
Yeah, definitely. To be honest, I was into Bitcoin already in 2011, but I would say that when Ethereum came along in 2016, I was very into Ethereum and just the blockchain technology because of the smart contracts. And exactly what you said, the programmability of money was the very intriguing part. And those kind of things, that flexibility and programmability that brings developers. And I guess that might be one of the reasons why there is so much things happening in terms of DeFi, especially in Ethereum.
Yes. So the idea with DeFi or decentralized finance is really it's about creating a separate or new decentralized financial system where it's really possible to utilize all the traditional finances that, we expect from the traditional financial system. So that's like, being able to borrow or lend or take insurance or hedge or even, get involved with gambling and prediction markets and things like that. But instead of having it based in the traditional centralized financial system, it's all about starting again and building this new decentralized system from the ground up. It's all about transparency and decentralization, even though decentralization it's a journey rather than a destination, right?
Yeah, that's actually interesting observation, actually, because we kind of don't know what's decentralization at the end of the day, because some things might have to be or require to be more decentralized than others, and somewhere you need less decentralization. It really depends on the use case. In terms of DeFi, we're talking about very core financial services instruments, so there should be some wide adoption of decentralization, but it really depends on the use case. And I would say that the journey is a correct way because we don't even know what the space will look like in the few months and couple of years. Because I had a very clear goal 2 years ago when we started as ETHLend, which was the first lending protocol in Ethereum, kind of what DeFi could look like in a couple of years. But now looking at what's happening there in the space with the flash loans, with insurance and credit default swaps options, it just becomes very intriguing and very complicating. And the complicated part is definitely the risk. Because in DeFi, what is interesting is that any developer that has a skill of understanding of the smart contract code and to understand how to build things can actually build financial products from any part of the world and basically interact with other financial protocols that are on Ethereum. So that's kind of an interesting part, that all these protocols and applications are interacting with each other, and it's very difficult to see what it will be in a few months and where the risks lie upon because of the so many layers involved.
That's right. So I suppose what you're saying, Stani, is that we're very early, and DeFi, because it is so new and the technology is relatively new and everyone is building really fast. But at the moment,
yes,
it's kind of, is it accurate to describe DeFi as this incredible big experiment right now?
Yeah, and that's the thing. I've never been actually at the same time so excited and at the same time so scared in my life, and as I'm now, because I really understand that it's an experiment and we're doing very interesting things. We're basically opening finance to everyone, developed by everyone. At the same time, we're kind of taking a bet which might have a lot of consequences. I'm not saying that basically DeFi doesn't work. It definitely works. That's my opinion. But I'm just saying that more emphasis should be placed in risk management, and especially in this multi-layer composability function where all the protocols are interacting with each other. There should be more scrutiny and more emphasis on the security and that side.
Yes, because the exciting part about DeFi or decentralized finance is that it's, one way to look at it is this is money as Lego, right? Or financial products as Lego. So all these different protocols, like Maker, Augur, Compound, Ethereum. You guys, you're all the developers are building little different products and services, and the way to think about DeFi is they can all be built or connected to each other to create new products and services. But by doing that, there are really exciting opportunities and also interesting risks and attack surfaces.
Yeah, definitely. And I think the composability, it's one of those things that are kind of like a double-edged sword. So on other side, it provides a lot of opportunities. It's the first time ever when financial transactions or application worldwide could interact with each other, transfer value, and you can form complex transactions with multiple protocols. And what is even more important is the liquidity. So basically, first time ever, you have this pool, or actually a ecosystem of liquidity that can be, without one single transaction, sent from one place to another and rebalanced, and kind of like a network effect. And if you look at the DeFi Pulse, for example, which is a listing of the most liquid DeFi protocols, where you find, for example, Compound, Aave, and MakerDAO, and so forth, you basically see that liquidity will jump from one place to another, and new DeFi protocols will emerge, and that number itself has grown a lot. I mean, I still remember DeFi not existing even as a term, and now we're reached over 1 billion so-called total locked value, which is the value that is locked into these DeFi smart contracts. Kind of like a yardstick for how big the DeFi space is. The market is small compared to traditional financial systems, but it's still growing a lot.
Yes, well, as you say, Stani, just the other week, DeFi hit that $1 billion mark. So there's $1 billion worth of value already locked up or moving around the DeFi ecosystem. And that's happened quite quickly. So, there's a lot of devs and users prepared to, I suppose, have skin in the game and take on the risk to start building out that trustless DeFi future. So it's about, anyone on Earth being able to participate in the DeFi ecosystem with no boundaries. All they need is a smartphone, and yeah, that's quite exciting. You did mention the phrase flash loan. It's kind of the topic of the moment. So I want to talk about Aave, and I want to talk about this idea of what a flash loan is. But just really quickly before we do that, I should have asked you at the beginning, why don't you give us just a little quick background on who you are? What was the path that led you into blockchain, Bitcoin, Ethereum, and then becoming the founder of Aave?
I basically came to the Ethereum space in 2016, before the Dow Hack. What was interesting for me is that my background was in law. When I understood the kind of like potential of smart contracts and Ethereum, I started to think how I could apply in traditional fields like legal field, and how to make that field a bit better, less complex, and more efficient. But I understood pretty quickly that you have much more potential in finance and financial transactions, and I've always been in love with economics, and I really love different kinds of financial instruments, studying them, and just that was like something that brought me into the lending space. And we started by creating first smart contracts for Ethlend just as an experiment. So we wanted to create a trustless transaction where two parties could make a loan transaction without trusting each other by using a collateral. And those collaterals were cryptographic assets on the Ethereum blockchain. And this was the time when we already had first token generation events, and there was secondary market for some of these tokens that could be already used. And the secondary market prices could be used through oracles in the smart contracts. And we did first smart contracts, and then we decided that this is very interesting stuff and we should definitely continue. And we created the Etherium, which was the first lending protocol, launched to the mainnet in 2017 beginning. And after that, we decided that we need to have actually, instead of this Etherium style peer-to-peer over-the-counter matching of lenders and borrowers, we need to pull the liquidity up and try to give more offerings for users. And then we came up with Aave Protocol. And the idea of Aave Protocol is basically to just give more opportunities to the borrowers by offering different kinds of interest rates, and of course to reuse the collateral which the flash loans come. And I can tell a bit more on that as well later.
Yeah, sure. So, well, because you really only launched the Aave Protocol this year, right? So I think the start of January, and you've got $19 million worth of value across various cryptographic assets, and you've quickly becoming one of the most talked about protocols in the DeFi ecosystem. How would you describe the Aave unique point of difference? And then we'll talk about flash loans.
Yeah, definitely. So end of the day, all of these DeFi protocols are competing one and a single thing. It's basically liquidity. So your Ethereum, your stable coins, whether it's USDC, USDT, or DAI, the way we compete is basically we try to generate more yields into the protocol to get more better rates for the depositors to earn more. And how we're doing that, there's two ways. One way is basically that reuse the collaterals that we have. So all the protocols that we have in DeFi Pulse that we are looking at, what they have in common is that all those assets are locked inside of the smart contract. And from traditional financial perspective, it's not very efficient way to use capital to lock them as a collateral. And what we are doing with the flash loans is that we are reusing that collateral to atomic transactions and generating via flash loan interest, more interest earnings to the depositors. So we are basically competing that way from their liquidity. And on the second part is basically focusing on the borrower side to provide more offerings. So usually DeFi protocols and on the borrower side, when you are borrowing, the interest rates are pretty much variable. So they are determined by markets and the liquidity available. So if there's a lot of deposits coming from depositors, the rates goes down. If there's more borrowers coming in, the rates will go up as the liquidity shrinks. The idea of what we did in Aave is that we offered not just the variable rate, but also stable interest rates. So basically, borrowers have more certainty on the market, and they can choose between the variable or the stable rate and switch in between. And that gives them more control. And we have then also offerings to borrowers that actually know how much they will pay interest in a longer period of time. And that's one way we basically generate more liquidity and earnings based on the functionalities that we have.
Sure. How would you characterize the ecosystem of users in DeFi or the people that are using the Aave protocol at the moment? What are they doing? Are there more people borrowing assets or lending assets? What does that look like?
Yeah, looking at currently the aave.now.sh, that's basically a dashboard made by our community member. I could see that 75% of the liquidity is available and 25% is borrowed. So roughly looking at the statistics, 1/4 of the liquidity is utilized by the borrowers, and there's 75% usually available to borrow. And this is a pretty important part because what it creates is so-called fractional reserve. So that means that if you deposit into the protocol now, there is more liquidity than the utilization. So you can actually withdraw on the next block the liquidity out, which is very important for the depositors to have this kind of like liquid system that they can enter and exit whenever they want.
Well, I think we better talk flash loans. How should we approach this? Obviously, there was a controversial event this week or 2 or 3 days ago now. Do you want to just talk us through what a flash loan is from Aave's point of view? And then I might get your expertise to help us try and make sense of the incident from 3 days ago. How does that sound?
Yeah, definitely. So I would say flash loan is a way to borrow liquidity in one Ethereum transaction and return that liquidity in the same Ethereum transaction without the collateral. And if the borrower doesn't return the borrowed flash amount, the transaction basically fails. What is important to understand is that between the transaction that you borrow and return, you can have nested transactions within Ethereum, which basically means that you can borrow one currency and convert it in one exchange and convert it again in another one to make a profit from arbitrage opportunity and return the loan, or make more simpler or more complex transactions within these two transactions that happen in the very same Ethereum transaction. So that's the very key essence here.
Yeah, so just to try and help me understand this, Stani, so I understand that arbitrage opportunities are one use case here, but can you talk through some other potential use cases? You know, what is the use cases that these flash loans enable, and what is the advantage that they unlock?
Definitely. So I would say flash loans are very beneficial when you need to do a transaction and you don't have the capital to do the transaction, and with a condition that you can actually do the transaction in an atomic way. So very good example is that we have a borrower that collateralizes ETH or BAT in MakerDAO's vaults to mint DAI, a stablecoin. Now that borrower might have collateralized that Ether and borrowed DAI and then has reinvested that DAI or has spent it in real life, that currency. And there might be a interest rate opportunity in another lending protocol, such as, for example, Compound, with lower interest rate on the same currency, DAI. Let's say, for the sake of argument. So that person could be refinanced, but to refinance, he needs to return the loan and take the collateral and then put the collateral into Compound and draw again the DAI. And if he has spent it, he can't refinance. So what the flash loans would help in this situation is that a developer could create a refinancing platform or a subscription service where basically he will take a flash loan from the Aave Protocol, DAI, and use that DAI by sending it to MakerDAO's vaults to close the CDP, the vault, and take that collateralized Ether and send it to Compound and borrowing their DAI with lower interest rate, and then returning that DAI back to the Aave Protocol. The beauty of the whole thing is that you have all these transactions in one single transaction as nested transactions in Ethereum. And basically, that's the very cool use case that you could actually do. So you can refinance loans between protocols. And if you want to become even more kind of complex or exotic, what you could do is that you could refinance from that DAI. Instead of opening in Compound a DAI loan, you just open with a stablecoin that is in lowest interest, for example, USDC, and then convert it, add additional transactions to convert it back to DAI in Kyber or Uniswap and returning that flash loan. So you can do all kinds of crazy things in between, and this is just on top of my head.
Yes, Stani, you used the word exotic, and I would like to add the word esoteric here, I think. So what you're describing, you guys who are the devs and the people building the protocols here in DeFi, you are creating this exciting, exotic, esoteric financial future where all these incredible, exciting opportunities are available. And the reason that's exciting is because it is, potentially outside of the framework of having to go through KYC or be over the age of 18 or, all the kind of boundaries and roadblocks that the traditional financial system can throw up. But the flip side of this, of course, is we are out in uncharted territory, and we did see that this week. So while flash loans are well beyond anything that is possible anywhere else in the traditional financial system, can you talk us through what happened with this flash loan transaction that involved everyone, didn't it? It was like Fulcrum, Compound, Didex, Uniswap. I'm not going to try and describe what happened, but I'd love it, Stani, if you could give us your overview of what happened.
Transactional perspective, it was a very fascinating transaction, but what it did for the market and the exploitment, that was kind of like a bit abusive we could say. In a nutshell, the person took a flash loan of certain large amount of Ethereum. So the interesting part with flash loans is that you can actually borrow as much as there is liquidity in the pools. For example, if there is now total liquidity available 19.5 million in the Aave pools, and borrowed is 4 million and available is 14.5, you could actually borrow that 14.5 million in a one single flash loan transaction and do the nested transactions. And what happened in this case is that he borrowed large amount of Ethereum, deposited to Compound to borrow WBTC, and then exchanged WBTC. He went with half of the Ethereum short on WBTC with 5x leverage, DZX, and then used half of the WBTC that he had available to crash the price in one marketplace, which, if I believe, was Uniswap. And then his short position made him funds. And basically, that's kind of a way of destroying the market a bit. And the prices of the DZX fell as well, as they were taking prices from Kyber, and where from orders were routed to Uniswap. So this is the part of the composability, which is pretty interesting, but also the kind of like a flip side. So there's arguments that all this was possible because there was a vulnerability in the BZX smart contract that allowed it to do, which is not anywhere possible, that has been basically fixed. And also there's some losses on the lending pool and their protocol as well. But it just shows kind of like as a tool, like what you can actually do with this flash loan in terms of composability. But one thing we really need to realize is that whatever you can do, the flash loans will give the magnitude. So instead of doing transaction with a couple of hundred ethers, you can do with 10,000 or 50,000 ether those same transactions without having any capital. And that's the scariest part.
Yes, well, and there's a few different ways to look at this, isn't there, Stani? So, for example, from one perspective, you could say this is one of the central issues in DeFi at the moment, is because it is so new and everyone is pushing the boundaries of what is possible. It means that it's very difficult to protect all attack surfaces is one way of describing that. And so the flip side of that is, if someone is smart enough to figure out an exploit, whether that's in the smart contract or just the way that the flash loan is conducted, then they're not really doing anything wrong. They are just using the system to exploit an opportunity for themselves. So, yeah, what do you see as the way forward here?
Yeah, I think it's a question of basically, I mean, if there's a bad design and that gets exploited, it's just a design error. What's interesting is that flash loan is really cool thing. I mean, it allows you to do so amazing things without the required capital up front. So basically, you could have a developer working anywhere in the world without a team and creating very interesting DeFi product or protocol and interacting with flash loans. But the thing is also at the same time that it allows that to do, there's also something that we need to remember, that we also need to have diligence in the code and also the design and how things will work. And I would say that the ability to do flash loans, there's nothing wrong there. I mean, it's a fascinating tool. But if you have a vulnerability, it just basically brings some magnitude into your code. But end of the day, I mean, if there is depositors who are depositing into a protocol to provide the liquidity to flash loans, and they're basically getting rewarded for that with interest rate, I think there's nothing wrong in providing flash loans to the DeFi ecosystem. It definitely is a game changer. It already, as we saw within a couple of days, really changed a lot in the space.
Yes, well, that's right, Stani. But, the other issue that this has brought to the surface again is, and, we have talked about this idea of decentralization being a journey and not a destination. And I understand that, and I think that is probably correct. That's correct for Bitcoin and Ethereum and, cryptocurrency or blockchains as a whole. But as we saw with the Ethereum Dow hack a number of years ago, again, the same thing has kind of happened here, where the BZX guys have, in their tweet storm that they issued to kind of summarize what had happened, they said that there was around 600,000 worth of WBTC collateral left by the attacker or exploiter, however you want to characterize that person or team. And they said that they would use that to exit liquidity to their existing iETH holders, and they would do that using their admin key. And they said that that was an extremely difficult decision and that they didn't take that decision lightly. And I'm sure they didn't, and that's exactly what Vitalik and his team said around the time of the Dow hack. That was a difficult decision, not taken lightly. But, what kind of precedent are we setting here? And are these situations just unavoidable?
Yeah, I really think it really depends on what kind of situation it is. Because, in case of it's a code vulnerability, admin keys definitely will help in a way that if you just launch your protocol and you want to make sure that you can upgrade if there's some patches need to be made. But on the other side, you're taking away the levels of decentralization by kind of like a many levels. But it really is a journey. So the more right protocol you have, the more decentralized it has to become. So it's totally understandable that in the beginning you have the admin keys and you can make changes, but you also need to be very communicative and transparent that what your keys can actually do, what kind of changes, to what extent, as it changes to new loans or old loans, for example, and also what's your path to decentralization, because that's important. And I've seen a lot that's happened that everyone basically promises the decentralization that we will be and we will be in the future and kind of like, which is totally fine. It's just like, basically, I think where people should more focus is just telling like why they have the admin keys now and what kind of situations they're willing to use them. And that's something that is completely missing in the space. So if you have the admin keys, what rights or what you could actually do with them, and in what situation you will exercise those admin keys. And that's, I think, is very key point in the whole discussion. And I'm pretty sure that it wasn't an easy decision to make, and it really always is case by case. I would say that in protocol level, I would say the blockchain protocol level, I don't think there will be in Ethereum another rollback. If there would be something big happening in the system of, let's say, DeFi, MakerDAO goes bust or something big happens, I'm not sure if something similar should happen. And that's why we need to keep more eye on the diligence of the code and the whole risk.
Yes, indeed. What I do like about Aave, and I think a lot of people have pointed this out, you guys have a really slick website, and the interface to engage with the Aave Protocol and the wallet link ups, everything is it's pretty slick. Is that something that you and your team thought was quite important?
Yeah, definitely. I think one of the part of the kind of like DeFi narrative is that, and it always has been for a couple of years now, is that it's very hard to interact with DeFi. Like, okay, I understand the benefits. I understand that it's non-custodial and it's transparent. I can see transactions in Etherscan. That's enough for me. But the actual interaction is very painful because there's a learning curve and all in between. It's important to expand the amount of DeFi users. That way we can onboard more users, and having a very easy and user-friendly way to interact with as least amount of transactions as possible is one of the key things. And it also boils down to the discussion of having different kinds of offerings for the end users. For example, being able to offer the variable rate, being able to offer the stable rate. Those are very important things. And even on the depositor side, we're trying to make things very easy. So when a user deposits, for example, DAI into the protocol, we have so-called A tokens, which represent your deposit. So you will get, when depositing DAI, you will get A DAI back straight into your wallet. And this A DAI, for example, if it's 100 DAI and now 100 A DAI, it grows straight into your inside your wallet. So you will see every second periodically the balance increasing. And this is a very interesting way to actually create user friendliness as well by innovation. And so far we have had pretty good user feedback, and pretty much everything we got in the first weeks we have from the end users we have implemented into the user interface. So we are very, very responsive in the development cycles. And I think that's one of the key points of creating good user interfaces and beautiful products.
Of course. And so your team has also successfully integrated with Sergey Nazarov and the Chainlink team. And so you have now launched an Aave Oracle network. So
Yes.
just talk me through that really quickly. So what's the purpose of the Aave Oracle network? That's a pricing data for lending and deposit rates, I imagine?
Yeah, definitely. So what we are using Chainlink and the Aave Oracle network is basically that we are injecting price feeds from different kinds of price feed providers, CoinMarketCap, different exchanges, centralized, decentralized, to have as wide range as possible in the Oracle, so that, for example, if you would have some sort of if you would use just one price feed, for example, Uniswap, Kyber, what might happen is that if this kind of like a flash loan attack comes, that will affect our Oracle prices and we will incur the same. So that's why when we are able to utilize Chainlink, we are able to mitigate this kind of risks. And so far, so good. We're very happy, and we're so happy that they are focusing on this, solving one of the most critical parts of the ecosystem, the oracles. And Aave itself, we are not an oracle company, and we're happy to actually take those services elsewhere and focus on the actually core, which is deposits and lending.
Excellent. Well, thank you, Stani, for talking to me about Aave and DeFi and flash loans. Let's go to a very quick break, and then we'll come back and we'll finish off with the very famous Crypto Conversation Hot Take Round.
Hey there, you Crypto Conversation fans. My name is Brian Krogsgaard, and in combination with Josh Olszewicz, we record LedgerCast, a weekly podcast all about cryptocurrency trading. It's a little different than what Andy's got going on here with the Crypto Conversation podcast, where he's interviewing folks, and we think that you would enjoy it if you like this. It's also brought to you in partnership with Brave New Coin, and I hope to see you soon. Just go to ledgerstatus.com to check it out or search for it on your favorite podcast player.
All right, and we're back, and I am with Stani Kulechov. He is the CEO of the Aave Protocol. Stani, I like to finish each Crypto Conversation podcast with a quick round of rapid-fire Crypto Conversation hot takes. Are you up for it?
Yeah, sure, definitely.
All right, just want your hot takes, your hot fire. Take your best shot. Here we go. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I think there is basically Bitcoin, Ethereum, Lend, and a couple of others, and then shitcoins. It's easy as that.
Okay, very nicely said. I don't know if anyone's ever answered that question quite that way, but I think you just might be right, Stani. All right, next question. What would you say is your firmest conviction, crypto opinion?
I would say that DeFi will go to 10 billion by end of the year.
Wow, 10 billion by the end of 2020.
Yeah.
Very bullish indeed. Well, speaking of 2020, I ask every guest this question, Stani. It's the American presidential election this year. Who do you think wins?
Wow, I think they're all kind of bad candidates. I rather will not pick any one of them.
What about universal basic income, UBI? This was an idea that was first brought to the mainstream by Andrew Yang, the Democratic presidential candidate, who of course has since dropped out. But on a long enough time frame, UBI is a potential fix for AI-induced automation. Do you think that's a good idea?
Yeah, I love the universal basic income discussion because I'm from Finland. So there has been a lot of experiments here on UBI. None of them have worked for some reason. But I would just say that the very best thing is to have good social benefits to allow everyone equal opportunity. And when it comes to AI, that might be the case that these benefits will be in some sort of universal basic income way distributed. So I would say that the system works, but the biggest fail is that if everyone gets the same, that will just inflate the prices, and I'm not sure if that works economically. So that's my only critique. Otherwise, the experiments are pretty interesting.
What's happening at the moment in Finland? Where have they got to then, Stani? Because this is quite interesting, and I think you're right. This is where it is most out in the wild in terms of experimental projects on the ground.
Yeah, I think they tried it in one area in Finland and they got some results. But the thing in Finland is that it's very difficult to test that kind of things out because you already have very good basic healthcare, social care, and so there is not that much difference. It's just the funds come from one address instead of, let's say, multiple. But now they're actually trying to do, we have a new prime minister and most of the, she's a 34-year-old female, and we have quite a lot of female ministers as well at this time. They're trying to push 4-day working weeks now. So that's also interesting to see if that goes anywhere.
Yes, indeed. 4-day working week and universal basic income, that would be a different world. A lot of people would be against that world, but I'm not so sure.
Yeah, no, I mean, it depends how you measure productivity. Maybe it helps, maybe it doesn't. I personally think it might actually even help.
Yeah, I tend to agree with you, Stani. All right, well, Bill Gates famously said, we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What do you think the DeFi space looks like in 10 years' time?
I think it will look like a system that nobody basically cares anymore because it's somewhere deep in the protocol. So these protocols will be somewhere in the back end unnoticed, the same way as we are sending email through email servers or writing HTTPS into the browser. They will go pretty much unnoticed. And I think it's good. It means that there's adoption and accomplishment.
That's right. Everything will just work. Well, Stani, William Gibson said, the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
Wow, that's interesting. Future is not here, not equally distributed. Everyone is limited by time, right? Basically, time and money are resources. And the thing is that not everyone can experience the same things. And this is pretty much an issue with capitalism. I mean, I'm a capitalistic person. It provides everyone ability to participate. But to participate into the capitalistic system in a democratic way, you also need to have very good grounds. And being from a rich family and a poor family will set basically different grounds, and it's less democratic than it looks like in capitalistic perspective. That's why I kind of like the Finnish model. I'm shilling Finland a lot here, but when you have the very necessary basic needs, healthcare, free education, including college, you can actually participate to the capitalism in what it actually allows you to do, which is be whatever you want to be.
That's right. It's that pyramid. You know, what's it called? Maslow's hierarchy of needs, something like that.
Yeah.
So if you have all your sort of your basic needs met, then you can really set yourself off on the path to, self-actualization and be the best capitalist contributor and producer that you can be, right?
I believe so, yeah.
Let's zoom out, Stani. We're almost finished. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
I think a lot of things will be changed by the artificial intelligence. Definitely will be a game changer. End of the day, everything will end, and sadly, but really think about the future is that the good part is that humans are always trying to produce, innovate, whatever they're doing, and I think that's why we are so well populated and have achieved a lot of things. But we also are very self-destructive, whether it's global climate or wars or economic crises. I hope we learn more in the future. I don't know what direction it will take. A lot of things depend on AI and ourselves and how we will treat ourselves and each other here. That's my take.
I completely agree, Stani. It reminds me of this tweet I saw, and I retweeted this. It said something like, our stacked cosmic desk is best articulated by E.O. Wilson, who said that humanity's problem today is that we have Paleolithic emotions, medieval institutions, religions, and godlike technology. So said another way, our biology, civilization, and technological capabilities are now completely out of sync. And I think that's exactly right.
That is right. I think that's very much right.
Thank you very much for talking to me today, Stani. Let's finish this off. Let's wrap this up. The microphone is yours. Please tell the people, tell the listeners where they can find you on your various platforms and where they can go to learn more about Aave.
Perfect. So I would recommend to go to aave.com. So it's aave.com and basically get yourself introduced to what we're doing and what kind of a product we have. And of course, there's a chance that you can actually interact with DeFi. And of course, before depositing and before going into this DeFi game, it's very good to understand what DeFi is, what kind of risks there are. So you can always come to our chat in Telegram or in Discord and ask more questions and learn. So DeFi is also a learning process. It's not just about participating, earning yields. It's also about understanding why we're doing this and why it's important.
Absolutely. All right. Hey, thank you, Stani.
Thank you so much, Andy.
And boom, there you go. Well, what did you think of that? Are you down with DeFi? Are you ready to borrow and lend, to buy and sell all kinds of exotic securities and put together esoteric configurations of different DeFi Lego components? No third parties required, just irrevocable, implacable software, code as law, no human beings involved except for you and probably your counterparty. So that's the vision for DeFi. We're not quite there yet, but we're heading there. What happens when something goes wrong? Should these protocols have an admin key to reset the clock if and when hackers find exploits? When is code law and when is it not? These are the questions that DeFi brings. And of course, I think the answers are going to take a few more years to play out, but the rabbit is out of the hat. DeFi is only going to get stronger, weirder, and stranger. And I think, there are going to be these incidents along the way. That's just growing pains. It's part of building out the system. But yeah, I think it's quite an inspiring vision on a long enough time frame. So we'll see you down the DeFi rabbit hole. Don't forget the next episode after this one, hoping to have an interview with Kyle from the BZX DeFi protocol. So look forward to that. To make sure you don't miss it, do make sure you subscribe to the Crypto Conversation podcast in whatever podcast app you are using. And of course, do please give us a 5-star rating in the Apple Podcast app or on iTunes. I think that's us for today. See you real soon. Keep it locked to the Crypto Conversation. But for now, we're out of here. This was the Crypto Conversation for Brave and New Coin. And boom, shake, shake the room. See ya.